Hey, what's up? Trader Tim from EminiMind here, doing a trade recap. It's Thursday, March 2nd. Wanted to touch on the NYSE Tick and how useful and helpful it is for getting in, winning trades, and then staying out of losing trades, and just getting so pinpointed with these entries that it seems like magic sometimes. But there's a rhyme or reason to it. So if we look at today's Thursday, and just kind of run through the morning here. As far as the retracements go, we had a couple of instances where the market pulled back and it kind of got this V here. So this 757, so 27 minutes after the bell was a really good place to take a long. But if we look at the retracement here, we really didn't get a retracement. We didn't get a pullback to the 50%. Drawing up the full, so actually I'm going to go draw up the full 50 here. We came down below the 61.8 just by a tick and a half, 2 ticks, and then you can see this V. But if we look at the 1 minute chart, 1 minute had a bit of a hammer, and 757 is this V on the NYSE Tick as well. So most platforms you can just use $TICK to get the NYSE Tick data. I'm using Thinkorswim, but it's not proprietary to Thinkorswim. You should be able to pull that data wherever you're at. The first thing you'll notice on the NYSE Tick this morning is we had these extreme readings at the open, minus 1,000. And anytime I see that, I just kind of ignore the first 5 minutes and use kind of from that 5 minute mark on. Any low tick that occurs after that point can be the low tick of the day. We had a gap down today, and overall in the morning, the trend on the NYSE Tick was pretty much up, higher highs and higher lows all morning. And so as the morning on the ES was pretty sideways, when the NYSE Ticks are rising like this, we did get a higher high put in here about 20 minutes in, and so that pullback, then I'm looking to buy, around the 50%. In this case, we had a pullback to the 50 with a hammer and a relatively low tick. Now, it doesn't have to be the low of the day in this case when you're buying at a halfway back, whereas if you were selling the high of the day with an inverted hammer or buying the low of the day with a hammer, then I want a high tick or a low tick to correspond with the inverted hammer and the hammer. Market's just about to close here, so we're going to hear the ding. So this was a good one to just buy above the high of this 1 minute candle. Notice there wasn't a pullback here on the retracement on the 512 tick chart, so it makes it a little bit harder to get in when we go straight up like that. But if you just drop an order 1 tick above the candle's high, then you get triggered on the next candle, and then boom, 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 just trail your stop underneath each candle's low, and that takes you up here to 45.50. The entry high was 39.25. So nice little run up into what was the new high on the day. If we go to now this high tick here, we actually had kind of an 8 o'clock, and then 8:01 was the next high tick. 8:01 candle is here. Notice it's not an inverted hammer. This gray line here is the top of the 30-minute range. That's going to come into play and be really handy, as we'll talk about here in just a minute. But we made it up to this negative 23% target of the 50% retracement. That's this dotted white line. And so that's a good place to look for the market to kind of roll over or pull back a little bit. Well, at 8:01, we had a high tick. We did not get an inverted hammer, but let's say you wanted to short anyways, and you put an order 1 tick below lows. Well, it didn't fill. The next candle went higher, so your order down here, 1 tick below lows, wouldn't have gotten filled, and so there's no harm, no foul. So that's the nice thing about the the NYSE Tick and using this kind of 1 minute approach, 1 minute candle approach, the high, low bar, low, high bar, which you can, I think last week or 2 weeks ago, did a video on that. Just search over on YouTube. You can pull that up. And so when we get to this high tick here at 8:05, now look at the corresponding NYSE Tick. 8:05 is not a high tick of the day. And so this one made a little bit of a move down. Maybe you could have got a point out of it, but we really just pulled back to the next 50% retracement and then started to bounce. We didn't make a new high on that bounce, but we pulled back to the top of the 30-minute range, got some support. That was an 807, and that was kind of down here. Not a super low tick, kind of following the uptrend. I'd be okay if taking this as a long on the retracement on the 512 tick chart. Same thing. We kind of came down, didn't break the swing high that was up here, so not really a great long entry on the 512 tick chart. You could have used that high of the candle. This one didn't really run very far, but it would get you back to break even, maybe a couple of ticks or something like that. But at the very least, you're not stuck trying to short all day long here when, by and large, the trend on the day has been up. Go to a little bit bigger time frame so you can see it. So by and large, today's trend was up, even though the morning was a little bit choppy, and then kind of got this general uptrend here, and then move sideways along the top of the 30-minute range. And so using the NYSE Tick to look for low tick, so 821, let's go to that one. 821, that was this kind of bigger pullback here, and we had a crossover, what I call the crossover trade, or crossover setup, if you will, on the 512 tick chart. So those are kind of the two setups that we're looking at here: the 512, the retracement trades, and the 1 minute high low bar, low high bar stuff. And so this was the crossover short. I didn't take it. It was pretty big. Like the anchor point was pretty high above the 50%, and then it was pretty low below the 61.8. So not really worth taking there. But we also at the same time had the low tick for the day put in right here. And so low tick is worth buying. High tick is worth selling, or at least looking at to sell a high tick and buy a low tick. So I didn't want to be shorting when I got a new low tick of the day. So again, NYSE Tick saving me from a stop out here by taking a short that would have just stopped me out. Let's see, 831 was the next one I wanted to comment on. So here at 831, so an hour into the day, we had this retracement, and again, it didn't come close. It didn't come all the way to the 50%, but it came pretty close. And 831 here is right here. So not the lowest tick, but again, starting to form a new uptrend, so pulling back to that uptrend. And we did have a hammer, so a relatively low tick in the uptrend like that. You could have bought the high, or one tick above the high of that hammer. This one went up to its negative 23% target. But what I wanted to point out is that it's not really worth shorting here, like this, because the low of this candle is pretty close to the next 50% retracement. You're only basically 2 ticks away. And so when you come close like that, especially on a day like today, where we were not always making it to the 50%, but we were bouncing every time, those kind of patterns are worth looking at to make your trading decisions based off of. And anytime we're within a point, that's pretty close to the 50, not worth trying to short. I just consider that kind of being bought up before the 50. The last couple things I wanted to touch on here is when you get a high tick at highs and then the market goes higher, and that happens again, high tick at highs, market goes higher early in the day, you don't want to try continuing to short. Maybe you take the first one and you get a first target hit or something like that, or it runs a little bit, but then you get that divergence where you have a new high price after a new high tick. Those are the days where you can you turn into these trend days, and you don't want to try shorting every single time the market makes a new high, because you get a new high tick, a NYSE tick. It lines up with highs for maybe 20 seconds, and then we go higher. So the same thing can be said on the downside. You don't want to just be buying up every low tick if you get low tick and then a new low. And so you have a divergence. So watch out for those. And also you get these situations where you get a high tick, like at 801, and then the ticks go lower, but the market goes higher. So like here, 801, and then 801. High tick was this candle. The ES went higher, the ticks went lower. And so I've, not that's a bit of a divergence where the market's going up and the ticks are going down. I'd rather come in here and wait for the ticks to go lower and buy in a low tick on a pullback than trying to kind of short that divergence, because that's showing that there's strength and that the pullbacks are being bought. And so even though when the market is kind of range bound in the early part of the session, you can see some of those cues, especially when you look at like where the 30-minute high is and where we are in relation to that, and you can just kind of connect some of these lows and see, oh, okay, we're going in this uptrend, and then we go along the 30-minute high for a little while, and then boom, we start breaking out over lunch and then continuing higher. And look at that trend line just holding all the way up, even though we traded sideways underneath it here. That general trend line taking us higher. So NYSE Tick, super helpful. $TICK on the Thinkorswim platform, and then for the NASDAQ, so that's the NYSE Tick. If you want the NASDAQ tick on Thinkorswim, just add the \Q, and that will give you the NASDAQ tick. So hope you have a great rest of your day. We'll talk to you soon.